Nvidia. Now, if you don't know my history around Nvidia, I owned the stock many years ago. I bought it kind of like the end of 2018, going into 2019. It was just an incredible opportunity at that time. A lot of tech stocks were getting hammered, right? I made some short-term money on Nvidia and sold out. Then I owned the stock in 2024, made a bunch more short-term money. I think I made like 50% or something crazy on Nvidia in a very short amount of time and sold out. And so Nvidia has always been a hard stock for me to own. I don't have any shares of Nvidia right now. And so it's always been a hard stock for me to hold on to over time. I've owned it on and off, and I've made money on the stock. It's been a good money maker for me, but not as much as if I had just held. It's very different than like a Meta stock, right? Meta is kind of opposite that. Like Meta, it's just very easy for me to hold that even as that stock goes up and make incredible amounts of money. And I think the reason is, at the end of the day, Meta is just a much more stable business model. Nvidia goes through these massive cycles of just like insane chip demand and then kind of a flatlining and then a crash. And so Nvidia is just, because it's a little bit more of a cyclical company, it's just a lot harder for me to own it for the long term than it is something like a Meta, right? Now, what happened here today? The sell-off was sparked by concerns that Chinese artificial intelligence lab, DeepSeek, is presenting increased competition in the global AI battle. Last month, DeepSeek unveiled a free open-source LLM, large language model, that it says took only 2 months and less than $6 million to build using reduced capability chips from Nvidia called H800s. Okay. NVIDIA's graphics processing unit, GPUs, dominate the market for AI data center chips in the US, with tech giants like Google McDougal, Meta, Amazon spending billions of dollars on the processors to train and run their AI models. Analysts at Cantor wrote in a note to investors that the release of DeepSeek's latest technology has caused, quote, great angst as to the impact for compute demand and therefore fears of peak spending in GPUs in 2025, right? Okay, no bueno. The analysts who recommend buying Nvidia shares said they think this view is the furthest from the truth and that advancements in AI will most likely lead to an AI industry wanting more compute, not less. Now, this reminds me of a situation you guys ever, known two people that broke up before and you knew both parties and you heard why it happened, right? They went through a breakup, a divorce, whatever. A lot of times what happens is, the female blames on the male blames on the female, they just blame it on each other, right? And it's all the other person's fault. And what you find in those situations is there's some truth, right? There's some truth on both sides of it. But it's not 100% truth. That's how I feel in regards to this situation. I think there's some truth about this DeepSeek likely was able to build this model that's very impressive from what I hear. Yeah, it's as impressive as what OpenAI has, if not more impressive. I believe they were able to build this in a pretty short amount of time. And additionally, I believe they were likely able to build this for less money, maybe even far less money than, let's say, the big tech giants that are spending all this money on all these Nvidia chips right now. With that being said, I have a lot of doubts that they pulled this off for $6 million in 2 months. I have a lot of doubts about that. My guess is, this is a complete guess of just kind of putting all the pieces together. I believe in China, there's several companies that have the H100s. Several companies. You can get them through various means. As everything in this world, if something's illegal, does that prevent it from coming into a country? I don't think so. So if these H100s are illegal in China, they're not supposed to be over there. You don't think they could end up there? Of course they could, right? So my guess is this DeepSeek is probably illegally using some of NVIDIA's highest end chips, but they can't admit it. Why can't they admit it? Well, because they're not supposed to have it. And last thing you want to do is tell the world, oh yeah, we got all the NVIDIA highest end chips and we're using all these. No, okay? So that's my guess. There's some truth in the fact that they built this model in a pretty quick amount of time and they did it for cheaper than what a lot of these big tech companies are doing. But I also call BS on them building it for $6 million. I call complete BS on that. Okay. So, little truth, little lies, in my opinion, in regards to that. Nvidia calls China's DeepSeek R1 model an excellent AI advancement, right? Now, there's a few ways you could look at this, right? This is like, first off, you could look at this and you'd be like, oh my gosh, like if you are of the belief that they built this for only $6 million, right? Which once again, like, okay. If you're of that belief, then you look at something like this, and this is going to scare the crap out of you in regards to NVIDIA, because you're like, oh my gosh, they're giving them even more credibility. NVIDIA and Jensen's coming out and saying this is incredible AI advancement and an achievement this company pulled off. If you think they only built that at $6 million, that's not a good feeling, right? You'd almost rather have NVIDIA not say anything in regards to it. My guess is NVIDIA probably knows that this company is using some of their highest end chips behind closed doors. They just can't admit it. That's my guess in regards to that, right? So what problem did I tell you guys NVIDIA would run into in 2025? The problem I told you NVIDIA was going to run into is they're going to run into the situation where essentially is exactly what they're running into. People worrying about peak spend in AI chips, people worrying about 2025 being the last year of really strong growth for NVIDIA. And then 2026 and 2027 kind of like, we can call it very slight growth or maybe even flat lines. Or you have some people running these conclusions about maybe even a decline in spending, which is a whole situation. So, it remains to be seen. Now, let me show you guys another issue with NVIDIA, okay? So, the issue with NVIDIA when it comes to valuation actually has nothing to do with the forward P. The forward P actually looks very fair for NVIDIA, right? A 29 forward P for a stock that's been growing the way NVIDIA is growing, like that's not bad at all. Even if NVIDIA went down to slight growth, when I say slight growth, I'm talking the 5 to 10% range. I mean, still 29 is not bad, even if the company had 5 or 10% revenue growth per year. So that's not the issue. The issue's down here. NVIDIA's price to sales ratio has gotten so insanely rich on this stock that's where the valuation concern comes in for NVIDIA. We're talking about a price to sales ratio on NVIDIA of 30 plus, right? Now, if you look at somebody like an AMD, 7.5. So we're talking about NVIDIA has about a 4x price to sales ratio over AMD. And so that causes quite a concern if revenues were to essentially flatline, or especially if they're going to decline. Because if revenues were to start to decline, that price to sales ratio would probably have to get cut in half or more, which means there could be 50% plus downside in NVIDIA stock. But before you run to that conclusion, be careful running to that conclusion, right? Because if NVIDIA keeps growing and growing, like that's not going to happen, right? It's just this concern about like you don't need as many chips and companies bring down their AI budgets, something like that. That's where the issue comes in. It's not around PE, it's around price to sales ratio of NVIDIA. So that's the important thing to understand here, right? So for me personally, NVIDIA is a no touch. When I say no touch, I don't want to buy the stock right now. I also am confused about, what is what are NVIDIA's revenues going to be in 2026, 2027, 2028? That I can't tell you right now. I cannot confidently say anything. I could confidently tell you roughly where Meta's revenues are going to be in 2026, 2027. I can pretty confidently tell you where Amazon's revenues are going to be in 2026, 2027. I can't do it with NVIDIA right now. It's a really difficult time because they just went through such a hyper cycle of AI chip demand, which is still funneling through in 2025. But then 2026, it's a real question of like, could CapEx budgets fall? And I think that's a real debate. Could CapEx budgets fall in 2026, right? And what does that mean for NVIDIA? So that's why I'm just looking at it, I'm like, I don't want to touch this with anything right now. I don't want to touch it. I don't know what that is about. I don't want to touch it with calls. I wouldn't want to buy call options on that. I know some people are buying call options on it today. Cool, but it's just not my cup of tea. I don't want to buy put options on it either. Because if NVIDIA comes out when their next quarter does come out and reports great numbers and everything, I mean, it's just, and also if you're buying calls and puts, you're going to have to pay such a crazy premium. Because also everybody's confused on what's going to happen here with NVIDIA stock over the next few weeks or the next couple months. And so therefore, if you buy call options or put options, you're probably going to have to pay crazy premiums on that, which is going to kill a lot of your profitability. So the moral of the story is, I don't want to do anything with NVIDIA. Nothing is interesting to me in regards to NVIDIA at the moment. If maybe the stock falls a ton more, then maybe it's interesting as a buy for me, right? If the stock skyrockets back higher, but then maybe it looks like some validity and maybe CapEx budgets maybe going down in 2026, because then maybe we could talk about it on the put side or something like that. But for right now, I don't want to do anything in regards to Nvidia, right? Now, you might see stocks like Meta having a good day today. Like you look at the Nasdaq's a disaster today. You're looking at Nvidia, the most important stock in the stock market for the past 2.5 years. The stock down 17% in a day, and yet Meta is like, oh, what happened? Oh, sorry, I went up 2% today. Oh, I was supposed to go down? I'm sorry, I didn't realize that, right? Amazon was also green today. And this is on a disastrous day for the NASDAQ. And so you got to look at it and you got to say, why is Meta stock, why is Amazon stock up today? Why are these stocks up today? Like some people would be like, this doesn't make sense. Let me tell you exactly why those stocks are up today. The reason those stocks are up today is because if there's some truth to the fact that you can build these models and you can make some of these AI achievements with lower end Nvidia chips or not as many of Nvidia chips as you thought, then that could put Meta, that could put Amazon and many of these other companies in a situation where they might not need to spend as much in 2025 as their budgets say. Or they might need to flatline their CapEx budgets in 2026 or maybe even bring them down. And if that's a situation, then we could be talking about those companies will have way more money to then do share buybacks, to buy out other companies, to pay dividends, and those sorts of things, rather than saying, we need to get all our free cash flow together and put it toward Nvidia chips. So that's why those stocks, even on a disastrous day like today, actually were green. People are like, huh? Because, yeah, I mean, I'll be honest, if there's any truth in what's going on here with this DeepSeek situation, then I can tell you companies like Meta and Amazon will not need to spend as aggressively as people think they will over this next few years, which is a tailwind behind those companies, right? So that's the whole Nvidia situation there.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with.
Alrighty, guys, I found you the clip here on Fast Money. Okay, Brad Gersner. This is a good little clip here I want to react to. I think you guys will get a lot of value out of this.
More GPUs. So again, what happened yesterday? It wasn't a breakthrough on the model. They actually built a model that's kind of where OpenAI was 10 to 12 months ago, the O1 or the O1 preview model. But there was this idea that they did it for a fraction of the cost. And I heard reported all over CNBC yesterday that it was $6 million versus billions of dollars to train O1 or O1 preview. I would say my informed speculation is that the cost of training O1 or O1 preview was less than $20 million. This was not a big price breakthrough. It's actually what you would expect. The cost of compute comes down by about 50% a year. So if it cost OpenAI a year ago to build this model $15 million, you would expect it to cost $7.5 million. And we know they also use distillation techniques. It's not to take anything away from DeepSeek. I think it's a great thing for the world that we're going to, make this cheaper for everybody. Everybody's going to have access as a consumer. All these enterprises are going to have access.
So that's an important thing to understand about this whole game here and this DeepSeek thing, right? Brad Gersner is basically saying the model is much more similar to where OpenAI was, maybe a year ago or so, right? And people could debate on that because I have heard this DeepSeek product is pretty high level, but the question is it better than what OpenAI has in the market today? Then, that's something that could be debated. But if that's true, then it's not nearly as impressive. If people think like what DeepSeek has today is better than what OpenAI has today, then we're talking about a whole different ball game, right? Because obviously there's just been a lot of spend that's going into OpenAI. But if it's more competitive to what OpenAI was in the past, then we can say, okay, like this isn't as impressive as maybe it sounded initially, right? And so I think this is a phenomenal point Brad Gersner is bringing up here.
Enterprises are going to have access. It's not just going to come out of places like DeepSeek. Llama is going to one-up them. I imagine there are going to be other companies like OpenAI and Google and others who are going to be open sourcing their lower tier models while, they still charge a premium for the frontier model.
Brad, I mean, your words are, people should listen when you talk, and I'm one of those people. And you mentioned price to earnings is not only reasonable, but given where we've been, it's extraordinarily cheap. But my concern is in terms of Nvidia, they're sort of out-earning their revenue. In other words, the margins at 77% suggest that something's got to give at some point. That price to sales number is still, for me, a bit of a sticking point.
That's a great point. Guy Adami brings up here, and that's what I was actually talking about on the main channel last night. If you watched my video on the main channel last night, I was talking about Nvidia. I was like, there's no valuation concern when it comes to PE or forward PE for Nvidia. Nvidia yesterday was trading at a forward PE in the high 20s, right? That's extremely fair for a company that has the growth rates of Nvidia. Even if the growth rates slow massively, that's still a very fair PE. The issue was, as I spoke about last night, the price to sales ratio is very, very rich. And so if there's a more competitive environment for Nvidia, margins could go down, which then could potentially start to hurt that PE, right? Because if you do look at the price to sales ratio of Nvidia, it is definitely sky high, and it's like, is this really sustainable long term? I don't know. It's a big question. It's a fair question, right?
I think, as an investor, I'm always trying to disprove my conviction. And like what is the thing that would cause me to change my mind on Nvidia? It's not the fact that we're going to drive down the cost of intelligence, because I think Jevons paradox, the actual amount consumed goes up. What actually would change my view is if I thought there was an alternative competitor who could produce accelerated compute in the world, anywhere close to total cost of operation, what they can do. So there was a lot of fear about custom ASICs and TPUs and Inferentia and Graviton, coming out of Amazon. But what we see is the explosion in demand is so great that there are use cases for those custom chips, but still the number of GPUs ordered by all those hyperscalers are going up, including Google, who uses their own custom TPUs. So I don't think this is either or. I think it can still work for Broadcom, still work for places like Astera Labs who are in that complex. But, I'm just looking at the numbers. I don't see the level of competition at the frontier of compute today to Nvidia.
So if this pulls forward adoption of AI, what else does it pull forward? Presumably it pulls forward peak spending, peak CapEx spending. Maybe it distributes the gains to software faster. I mean, what sort of changes in this new world?
The things that get us excited, a couple other themes. One is, people look, we wrote the letter to Meta in the fall of 22, and people wonder, how did Meta double, more than 2x their revenues while going from 87,000 employees to 65,000 employees? Because they were leveraging AI. Right? Every market leader can leverage AI to grow top line faster, accelerate their top line while reducing bottom line. And they're doing it across their businesses. It's accelerating today. The other one in software, we have 25% of our book in software. Everybody last year, Bill and I did a pod when everybody declared software dead. Right? And Satya came on our pod and said, maybe application software is a thin layer on top of a CRUD database. Again, not everybody's scared about software. Software's trading below its 10-year average at 5.7 times forward revenues. At the peak in 21, it was at 18 times. So I think there's a lot of opportunity in the market today, and AI is going to accelerate it.
You mentioned Facebook levering AI, and it's manifested itself in the last two earnings release.
So obviously, good clip there. I hope that brought you guys a lot of value there, listening to what Brad Gersner had to say in regards to that subject. I do think it's important.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the six-figure Hall of Fame. Do you want to see the next one? That's the seven-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to six figures, multi-six figures, seven figures, multi-seven figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with.
Mark Cuban.
Really means, and what correlations, if any, there are back to 1999, which you know better than most, considering you sold your company in April of '99 for $6 billion and collared it, and became the Mark Cuban we all know now. How are you thinking about all this?
Impressive, sir.
So I think one of the fundamental issues with the market right now is no companies are going public. You know, there isn't, back then, you know, Amazon was a new company. Dell was relatively new. You know, there were incumbents that we all looked at as being, you know, the default powerhouses, but there were new companies coming public that we can look at and say, okay, maybe these guys have something unique. I mean, if it was today, Google probably would not be public. Amazon might not be public. You can go down the list, and there are companies right now that are up and coming in the AI space that are private. And because they're private, nobody gets to invest in them. Well, at least, you know, typical investors don't. And you don't really get much conversation about them. And I think that impacts the conversations and the market movements that we saw yesterday and today.
Did you think it's going to change? Does this open the door to more startups because of what we witnessed from DeepSeek, the way we sort of think about these open source models, the way that, you know, maybe the incumbents are suddenly put on the defensive, so to speak?
Yeah, it was interesting because you mentioned earlier about an arms race, you know, the Meta, the Amazon, OpenAI, all just spending just billions of dollars. And that really reduced the competition because it sent the message that, hey, you've got to raise all this money just to play the game. 100%. Now with DeepSeek, the door is open. And actually, the door had already been open for smaller companies that were, you know, like company Grok that does an inference processor. The door has been open, but I think it's open wider now. Yep. And you'll see more companies get more visibility. And I think with the new administration and the changes at the SEC, I think there's going to be an incentive and a push for more companies to go public. Because the reality is it's not a stock picker's market anymore because, you know, the number of public companies continues to decline.
Oh, 100% disagree with that in terms of it's not a stock picker's market. Absolutely, it's a stock picker's market. I think it's more of a stock picker's market than ever before, right? Like way more than it's ever been before. I think the ability for you to overperform the market in a down market on down days and overperform the market on the good days is immense. Like, look no different than the public account. The public account smashes the market when the market's down and smashes the market when the market's up. Like, that's a great example of seeing that in action, right? And it's not like I'm the only one out here doing this. Like, I see so many people in my private stock group continually outperforming the stock market when the stock market's down and way overperforming the stock market when the stock market's up. Like, the stock market could be up like 1% and then they're up like 3 or 4% in a day, right? So we definitely disagree on it being a stock picker's market. I think it's more of a stock picker's market than, honestly, probably in history.
When you watched the sell-off yesterday, as an investor, I don't know what you're, invested in today in terms of public market stocks. I think you've gone through gyrations over the last, 5 to 10 years of being heavily invested in the U.S. stock market and then perhaps not so much. I mean, how does that look today?
Well, I had gone to cash because I was concerned about tariffs. I was concerned about the uncertainty. How high can this market go? And so when yesterday hit, I certainly took a look and said, okay, is now the time to dive in? And is this just an aberration? And I just don't get that feel.
By the way, I would not, this is no disrespect to Mark Cuban. I think he's a legendary, obviously billionaire, but I would not look at him for investment guidance, in my personal opinion. Like, I've never looked at Cuban and been like, oh, wow, he's making all these smart moves. Like, he's a man that did extremely well during the tech bubble in terms of he built a company, he sold it for a ridiculous valuation and banked billions of dollars, and then obviously he bought the Mavericks, the Dallas Mavericks basketball team, and it's done well there as, basketball valuations went up over the years. But just understand, like, I would not look at Mark Cuban as like, wow, he's the most intelligent investor. Like he's a Warren Buffett, he's a Peter Lynch. No. Okay, let's be very, very clear about that. He's just a guy that got insanely rich during the tech bubble, and he's did well with the Mavericks.
Earlier, there aren't those up and coming public companies that you can say, look, this just opened the door for them. Let's jump on board with them. I think there's so much uncertainty still on DeepSeek. Is the information we got in terms of their cost to create the models accurate? I mean, it's still too early to tell.
What impact do you think it'll have on Sam Altman? I'm not sure how well you know him, how much you might know about Open, but the idea that now, he's talking about, wow, this is really an incredible model. It's going to force us maybe to be better and earlier in how they introduce some of their new features as well. I mean, it really feels like, Mark, this was a goalposts moving moment for AI and how we're all going to relate to it as investors. Do you feel that way too?
Well, it certainly has been perceived that way. I mean, I think it's still too early to tell. I try to geek out and learn more about mixture of experts and the way they're doing their models and all that stuff. So, I think it's still too early, but I think what really changes is it's not just a race to raise as much money as you can in order to be a player. And it also impacts regulation. Because before, when we talked about AI regulation, the presumption was all these companies, the Metas, the Googles, et cetera, OpenAI, they were so big they needed to be regulated because there really weren't up-and-comers that could disrupt them. Now, if all this plays out the way it appears to, the message is, bring on the 12-year-olds, bring on the disruptors who can come in here and change the AI game. There's an old saying, when you run with the elephants, there's the quick and the dead. And we finally found somebody quick who can run with the elephants. And now the question is, can the elephants run with the quick companies like DeepSeek? And I think you're going to see a lot more entries into the AI space. I think you'll see a lot of more private investment into small up-and-coming companies. I can't tell you how many conversations with private companies I've had, and now, it turns out I was wrong, where it was like, well, shoot, you're going to have to raise billions and billions of dollars just to compete with these guys. Mm-hmm. Now someone can walk in. I had a conversation with a company last week where we were talking about, the thing with TikTok is their algorithm, and they wanted to do algorithms as a service and build models so they can license what they think will be a better than TikTok algorithm to any social media company or other company that wants to use it. And the question was, how big a model and how much of an investment do we need to make? That all just changed. And so I think you'll see a lot more companies get funding that otherwise might not have gotten it because it won't take as much money to compete.
Interesting.
Great points by Mark Cuban. No, so I think Cuban brought up a lot of great points here, but let me be very clear about why I believe Mark Cuban's cash and why he wasn't buying yesterday. Let me be very clear about this. Mark Cuban is well known as a Democrat. He is well known to like those sorts of policies and things like that. And what do we know happens when a new president comes in who the other side might not agree with, right? A lot of times people get bearish on the market. And you heard him. He's worried about tariffs, worried about this and that, right? And this is what happens time and time again. You want to be a Republican? Go be a Republican. You want to be a Democrat? Go be a Democrat. You do you, boo. But you don't sell out of your portfolio and go cash because your guy or girl is not in office. No. People messed up selling stocks when Biden got in office. People messed up selling stocks when Trump first got elected in office, right? Like when Trump first got elected, the market tanked initially, right? Huge mistake. People that were selling stocks heavily in 2022, Biden was in office, big mistake. This happens time and time again. People will sell out of their portfolios because the guy or gal they wanted did not get elected, okay? Big mistake. Big mistake. After Obama got elected, market tanked. And if you weren't invested under Obama, you missed out on so much money, it's ridiculous. Happens time and time again. Don't let your politics and who you vote for dictate whether you're going to invest in the stock market or not. This is one of the main reasons that I stay apolitical. I don't say I want to go be a Republican, I'm going to go be a Democrat. No. There's certain Republican policies I might like more, there's certain Democratic policies I might like more. But I'm not going to go make my investment decisions based upon whether a Democrat's in office or a Republican's in office. And I believe Mark Cuban, like many others, when their person's not in office, they get bearish. They think negative things about the economy and about the market and all those sorts of things. And it's just been proven statistically, factually, not opinion-based, factually, to be a monumental mistake to sell out of stocks because your person's not in office. I can give you the data based upon every single president, Republican or Democrat, over the past 50, 60, 70, 100 years. Look back as far as you want to. And the moral of the story is stay invested. Stay invested, okay? So that's that.